Hi guys, today we have one of the Meteora Legends token guy. He's going to be showing us a little bit about the Meteora DLMMs, some of the safer pairs such as Sol USDC, as well as a little more riskier strategies that they have been very successful with over the last couple of weeks and months. So yeah, maybe for the beginning, we can have an introduction on your end, maybe a little bit of your background. How did you come to explore this beautiful arena of crypto?
Yeah, for sure. So I'm Token Guy. I've been doing DeFi stuff pretty much since I entered into Solana blockchain, which was about 3 years ago. It was actually 3 years ago this month, and
Nice.
yeah, I've done a lot of different things because obviously the market has changed over time. I started with doing basic kind of just liquidity providing as well as trading NFTs and stuff like that. I then moved into NFT AMMs. And then after NFTs had kind of died down, I shifted into concentrated liquidity market making, like on Orca, providing liquidity in a more concentrated form. And then finally, within the last few months, I've been on Meteora. And so Meteora, yeah, it's just a little bit more dynamic. It's a little more advanced, but also has more potential to earn more. And so yeah, I've been doing that. I have a few different wallets that I manage. One is like a group wallet that I took from like 20K to 100K in about a month and a half. And then I have a personal wallet that I've used and I've made a lot off of that as well. I was doing going to do a flip challenge on it, but then I ended up needing to do stuff with those funds. So I ended up stopping that, but I actually just started a challenge, a new one to 100K, and I'm not doing anything with it. It's a public wallet and stuff I posted that I'll be doing as well. I do live streams on Twitter, which I'll actually be doing one today, be talking about Magic Eden and be live streaming that tomorrow as well with the me drop. But overall, I just kind of love doing this. I like educating and helping people learn how to do it as well. And so hoping to do some of that today.
Amazing. Amazing. Thank you so much. I've seen the
Yeah.
post that feed printers are actually doing this like kind of a boot camp, like what Meteora Discord is doing
Yeah.
as well. So it's just amazing that you're engaging with communities and actually teaching people this because it is incredible. You can make anything between 15-20% weekly on safe pairs like Sol USDC and just even more in the meme strategies that we're going to be discussing as well. But
Yeah.
maybe for the newer people, we've made a lot of Meteor content over the last couple of months, but primarily it is probably the best place to park your liquidity on Solana at the moment from the risk reward ratio, because we're also speculating on the Meteora airdrop as well.
Yeah,
What's the next step?
absolutely. And so as you earn fees using Meteora, you'll also I didn't start doing it to farm the drop. I just did it because I wanted to make money and it was a great way to do that. But obviously while I'm making money, I'm also farming the airdrop. And so just by, having volume and earning fees, you'll gain points that will go towards that. So yeah.
Dollar. Yeah, this is what we always talk about. $1 in fees is like $1,000 in liquidity on Meteora. It's the formula. So amazing. All right, let's
Yeah.
get straight into it then. What bins are you usually using? So people get to this homepage and they're like super confused. What is this bin step, fee percentage?
Yeah, so
Is
I'll break it
daily?
down. Yeah, I'll go through some of the details and break it down just simply. And so, yeah, so when you come to the main site, you'll go to DLMM here. They do have other forms of different pools and stuff, but these are not as good as far as the yield. Um, you can see a lot of people are doing this because there's 188 million locked right now. Also, by the way, if I end up moving away to do other things, it's because I am live DLMMing stuff like this. And so if I end up needing to move something, just know like this is a meme coin I'm doing, but if it drops below my range, then I'll end up moving out of it. So, but anyway, so yeah, so you can see there's a bunch of money locked here. These are all the different pairs. So when you provide liquidity, you're providing two sides. So you're providing two different tokens. That could be Solana and USDC. It could be USDC and Bonk. It could be Sol and Bonk. It could be Sol or USDC of any coin. It could be a meme coin with another meme coin. It could be Jupe with JLP, right? So there's a ton of different options. And basically what you're doing is you're providing liquidity so that anytime one of those tokens trades with another one of those tokens, there's liquidity there, meaning there's money there to be traded. So you can imagine if you're trading baseball cards or some sort of, popular thing that doesn't have liquidity, meaning there's not money there. I could say that a baseball card's worth $100,000, but if it takes me a year to sell it, I'll probably end up selling it for $50,000 or $20,000, right? And so the idea is that with any asset, If there's not liquidity, meaning that there's not money there to actually be able to sell it immediately, then it's not actually worth that. And so y'all seen slippage before, right? Where you go to buy something and there will be a 2%, 5%, 10% slippage on something. Well, slippage happens because there's a market making book and there's a gap basically between it where someone's saying I'm willing to buy it for this much or sell it for this much, but there's no one that's saying they're willing to buy or sell it for that much. So when we provide liquidity, what we're doing is we're smoothing out that gap and filling in. And so providing liquidity helps with trading. It helps with tokens overall health and things like that. And so we get to earn money along the way. And so one of the most popular traded combos is obviously Sol and USDC, which is why it has $9.6 million here in the TVL. And so, yeah, so we'll look at Sol USDC. So I just swapped some Solana for USDC, a small amount because Sol is actually down right now. So normally I wouldn't be creating a Sol USDC pool because I have to sell a bunch of my Solana for USDC and it's at 230 right now, roughly. And I want to speculate on Solana going up. And so I'll probably just hold it right now. But in general, if you're just doing this strategy, trying to earn over time and Solana's, ranging in a decent place, which I'll describe more, then this is a great strategy. And so basically when you look at this here, you're looking at the token pairs, which we're looking at Sol USDC, the total amount deposited, how much volume this TVL has collected, and then the range of 24-hour fee. So this is how much it's estimating the last previous 24 hours. It adjusts automatically and averages out. But within the last 24 hours, you could make, depending on what pool you select, between 0.01% and 1% a day. And so if you click on that, you'll be able to see, when you first click on it, it'll actually only show you 3 pools. Now, let me show you like this. It'll show you the top 3 like this. But if you want to look at more, you just click show all. We'll just leave it on these 3 for now. And so you can see the different pools, how much money's in them, how much they're earning, right? This number can be a little deceptive because what it's doing is it's showing you the average based on how much is deposited and what the volume is. But this top pool right here, if there was $2 million in it, let's say there was $2 million and it earned this much, and then someone withdrew 1.5 million, so now there's only $500,000 left, this number is actually going to go up because the volume it showed on this pool is very high, but it was based on a higher amount than what's actually there. So generally, if you see $1 million plus, even like this 5 million one, if someone took out $1 million here to 4, it's not going to make a huge difference. And so normally these rates are fairly accurate, but just if you do look at them and you see like a very low amount with a huge amount here, just be wary of that. It may be a little bit off. It's usually fairly accurate, but there's some, it could be a little deceptive. So those are the numbers here. You can see total volume, 24-hour, right? You can see the individual ones, and then you have the bin steps. So the bin steps are essentially the range. It's telling you how much percentage, like for every bin step, it's a percentage of the pool that's moving. And so a tighter one or a smaller bin step means that when you create your pool, which I'll explain in just a minute, basically the bin steps are the range or how tight of a range you have as the price moves up and down, which I'll show in a little bit. So if you don't understand that, that's okay. And then the fee percentage here is how much you're charging. And so anytime you go to make a transaction, there's a fee of some kind. So if I'm trying to exchange, some Sol for Fred here, you can see on Jupiter when you route it. Let's see. Yeah, you can see the.
It's usually showing Meteora DLMM. Usually,
yeah,
but sometimes it's Orca, sometimes it's depends who gives the best rate.
They just added this like onto their trade site. I'm not sure why it's showing me that. Oh, maybe I do this. No, that's history. I don't know. Anyway, but it'll show you the route and it'll show you the fee. There. And so basically this is your fee percentage. And so if you charge too high of a fee, then you're going to earn more per trade, but you'll have less transactions come through your pool. And so that's what the fee percentage is, right? It's how much you're charging to swap. So very new coins that are super volatile, like this coin here, you can charge a higher fee, 2%, 5%, like some really high numbers, right? But once you get
Mm-hmm.
into coins like Sol USDC has much lower percentages, or like really big large cap coins that you can think
Yeah.
of, Bonk and stuff like that, you would have much lower percentages because people aren't going to pay 2 or 5% to swap. So the market's much more competitive. So you'd have a lower fee like this. All right. So we're going to click on one of my favorite ones, which is the 20 bin step 0.2% fee. You can see this one's showing an average of 0.44. It also has the most money in it. There's a reason for that. Certain pools just like hit the sweet spot when it comes to the range and the fee percentage. And this is one of those. And so you can see like these are some fees that I've earned in the past that I've already claimed. But you can see here the total pool TVL, the bin step 20, the fee 0.2. The max fee says 10% because as volume increases on a token, on Meteora, they're called a dynamic liquidity market maker, DLMM. And so as a token has volatility, the base fee is 0.2, but you'll see here the dynamic fee. Technically, it's slightly higher than 0.2, but this can go up a lot. And so you'll see on like really volatile coins early on, like this will literally go to like 5, 7, or even 10%. And the max is 10. But like it'll go crazy high on like really like volatile early on meme coins, or like Magic Eden tomorrow. I'll probably have like a 5% fee set up, and it might go, it'll
Mm-hmm.
probably stay at 10% for a long time. Honestly, it'll probably do really, really well. And so that's what this means, though, just so you know. You can actually click on the pool chart over here, Bird Eye, Deck Screener, stuff like that, and it'll actually show you this specific pools chart. So this is something that's useful. You can actually see the transactions specifically going through this pool. So anytime people are buying and selling, it goes through different pools. It routes them based on like what's the best price, or if there's not a lot of liquidity, it'll just go through whichever one it thinks is the best. So I'll actually just dump it a little bit
Yeah.
right here. And so you can see it looks a little choppier than normal because it's not capturing all of the buys and sells on the blockchain for Sol and USDC. It's just capturing the ones in this pool. And so you can see all the buys and sells here. So if you wanted to look at a token, how much that action that pool's getting, you can click on like the pool chart here and you'll be able to see. Okay,
Mm-hmm.
so you can see how much liquidity here, your current balance. So we'll go here, you'll add liquidity. And so this is where kind of the strategy comes in of how much money you're putting in, what strategy you want to use, stuff like that. And so again, this is a 20 bin 0.2. So if I click on autofill here, it's going to autofill to where if I put in 1,146 USDC, it'll automatically put in roughly the equivalent. It's not exactly, but 5 Sol here. And then you can see based on how much we put in, there's the strategy here. So there's spot, curve, or bid ask. I pretty much don't ever use curve. You can use it, but I would say for new people, just don't worry about that. And bid ask, I would say is a little more advanced as well. But like with Magic Eden, this could be a good one tomorrow. Anytime you think that a token's going to really be like moving like pretty drastic in range, then you could use this one. But the spot strategy is the one that I recommend. It's just an overall solid strategy. It splits your liquidity evenly across all the bins. The curves focuses them all towards the center, and bid ask does the opposite. It focuses them all towards the ends of your range. Spot just spreads it out evenly along the way. So I really like the spot strategy to start. And then
Can I
down
just add?
here, yeah, go ahead.
Can I just add something? So for people who don't understand what this means, that basically means that most of your Sol or USDC is being bought on the edges for the bid ask, which is
Yeah,
amazing because you want to be buying low and selling high. So this
right.
is actually great because most of the liquidity is concentrated on the far edges of the range.
Yeah, exactly. So like if there's something that you're unsure how it's going to move, or sometimes it moves to the end of the range, but sometimes it stays tight, like spot is good for that. But like you said, if there's something that's like moving, yeah, on moving and buying low, selling high type situation, like he's talking about, bid ask is really, really good. I like both of these strategies. But to start, I just say spot is a good just overall strategy to start with, so you don't have to worry too much. And then even though we're in a 20 bin, you can see if we do the autofill and we're on the 20 bin step, you can see that it automatically places the range here at negative 6.57% down and 7% up, which Sol is currently at 226.20. And so this would put the Solana at 211 all the way up to 242. So this is like a pretty good range. It's not so wide that you're not going to earn a lot of fees because the wider you go, the less fees. The more concentrated you go, the more you'll earn. But there's also more room for what we call impermanent loss, and I'll explain that. But you can actually change the range down here. So let's say you think there's more upside to Sol. Like right now, Sol's dipping fairly low compared to where it's been. So maybe I'm like, all right, I think that it'll end up being more on the high side than the low side. You could move this down like this and set it up like that. Or if you just want to concentrate it more all around, you can move it in like this. And so it's up to you. This is just the base. I would say it's good to start with a little bit of a wider range whenever you start, be a little safer until you kind of learn how it works. I could get even deeper into the individual bins and the number of bins here and all that kind of stuff, but I think for now I'll just kind of say like essentially these bins are their own little liquidity pools. And so the way this is part of the DLMM, this is different than a normal like CLMM, but the DLMM that they have on Meteora here, as it basically creates a bunch of tiny little liquidity pools that are all joined together, and this reduces slippage and makes it much more efficient. And so that's why it looks like this, and that's why they do it that way. And so that's the gist of it. You can also see here like how much of your money is in this bin compared to like the whole pool. There's like 5 million in here. So obviously like mine, I have 0.05%, right? But if that's something you're interested in, you can see that as well. Some more details here. And that's pretty much it. So we would autofill, we would create the pool like this, and then we would add liquidity. You can see also down here, it says Sol needed to create one position. If you did make this like really wide, wider than what's recommended on it, you'll see here it actually creates like 2 or 3 positions. And basically all it's doing is it's adding multiple ranges. And so your liquidity would be split into 3 different positions. And so I don't necessarily recommend doing that. You can do it, but you could also just manually open another position if you wanted to also, or if you want different strategies, you can actually mix those up as well. And so it's a little too extreme here. What you can actually do is you can add a liquidity. So I'm going to add it for the bid ask like this. I actually did half of my USDC. And so you can actually do it with like a mixed strategy here. And then what I'll do is once this completes, I'll add to this same position, not a new position. And so that's added. So you can see it's here. So I'll add to this same position. But now I'm going to do spot. Strategy. And you can see it then creates a mixed strategy on the bid ask and the spot. And so this is a way you can do it as well if you're like kind of unsure, or you think like you want something that's kind of in between, one's too extreme compared to the other. And there you go. And so now you can see, there it is. So now it's just a less extreme bid ask essentially, right? So there's different ways you can manipulate it. You could obviously change the range as well when you do this. There's a lot of stuff to play with, but that's the gist of it. This pool is earning an average of around 0.47%. When Sol's more volatile, this goes up to almost 1%. And on the lower side, like it is today, it's usually down to like 0.4, 0.5%. And so obviously that's really, really cool. Let me show you the calculator. So a lot of people don't realize, because we earn so much in Web3 compared to traditional finance. And so when people think about like Web3, I think they think about trying to like make quick profit and then like flip that into more quick profit, which I do as well. I have a mixed strategy for what I do. But people don't realize the power of consistency and compounding. And so like if I take $2,000 and I'm able to earn 1% a day. So let's say I do Sol USDC, but let's say I have like another coin that's like a little bit more, earns a little bit more, which I'll show y'all. You can earn like 1%, 2%, sometimes even more a day. So you can do $2,000. Let's say you start with that. You earn 1% a day for 1 year, and you just compound every day. So what you would do is once this builds up, you can see right now it's like starting off pretty low because the fee is fairly low, but this will build up over time. And so let's say it gets to like, the whole day, if it earns $0.5
a day, right?
Percent. Yeah, times 2230 equals, so $11 a day. So let's say every day you would compound this after you earn the 0.5%. And then you would just take that $11 and you would put it back into the pool. And you just do that once a day. And then once you get high enough, like after a few months, maybe you could even compound like twice a day, because then maybe you're earning $20 or $30 a day, right? So you could actually compound even more quickly. And so most people in traditional finance don't think of compounding daily. They think of compounding monthly, yearly, stuff like that. So we would compound daily, $2,000, 1% every single day. So 365 days a year. And if you calculate it, after 1 year, you'll go from $2,000 to $75,566. And so you can see each month how that grows. And so the first month you'd make $489, right? So you're making that $11.15 a day, you're obviously compounding it, but if I just multiply it by 30 days, that's 334, right? So it's estimating 489 because you would compound and each day it would grow. And so you could see that. But then like the next month you make $900, right? Then the next month you make 1,100. And then by the time you get to like month like 5, 6, 7, you'll see it start to like really grow where you're now earning like thousands of dollars a day. And then once you get to like months 8, 9, 10, 11, 12, like it really skyrockets. And if I were to do this for like even longer, like 2 years, like it'll blow your mind. It'll look like a number that doesn't even make sense. Yeah, so $2,855,000, right?
Couple
And
of
that's
us,
like,
some of us, sorry for interrupting, some of us were in those stupid Ponzi's of 2022 and 2023. So we remember these calculations, but
yeah,
for now, for the first time, they're actually realistic because
correct.
they're happening in front of us. So,
So yeah, so that's this. Are there any questions, any thoughts around that? And if not, I can show some like higher volatile stuff as well.
that would be great, yeah, because a lot of people are interested in the meme coin trading pairs, but people need to understand that there's huge risk in that. So we
Yeah,
also need to understand how impermanent loss works. We've just done a video on the whole Meteora strategy where there's a section about impermanent loss, but maybe
yeah,
just 2, 3 sentences about that. Maybe
yeah.
3 examples would be best.
Yeah, absolutely. So, for instance, right now I have $2,230 in here, right? And so, whenever you set up a pool like this, you're providing the liquidity pair, right? So, roughly, we provided, 5 Sol or a little less than 5 Sol and around a little over $1,000 in USDC, right? So, as the price of this, of like Solana, like if it were to go down, you're swapping your USDC for Sol. So, essentially, you're buying Sol, right? As it would go down. And so as that happens, obviously, if the token keeps dropping, then how much your Solana that you've bought high here is now worth less, right? And so like let's say it pushes all the way out of range. Well, you were buying Sol at 225, 224, all the way down to 13, 212, right? And now maybe it's at 210. Well, this $2,200 is now going to be like $1,500 or something, right? So I don't know the exact amount. I'm just saying it'll be worth less. So you have more Solana now, which may be good. It may not actually bother you that you have more Solana because then you're like, okay, great, I've earned more Sol. And so I think Sol is going to go up and I'm holding it, so it doesn't bother me. And if it went out of range, then you would just close out of the pool and remake a new one and then wait for it to go up and then do the same thing, right? Which is so impermanent loss for me around Solana isn't the same as it is with other coins, right? Because I
Yes.
am holding Sol long term. So for me, like when I make these pulls, it's really not a big deal if I'm earning more Sol if it goes down, right? I actually sometimes get excited when it goes down because then I'm like, oh, good, I got a bunch of Sol. I'm going to close it out because I know it's about to come back up. So I do swing stuff like that. But let's take a look at like a meme coin, for example. We'll look at, I'll show like this super volatile meme coin that I'm currently DLMing just from like 30 minutes ago, like right before we got on the call that's doing well. But I'll start with just some like basic stuff like FartCoin here, right? And so FartCoin's fairly stable. It obviously has its price swings and stuff, but we were earning around 3% this morning. It looks like it's come down a little bit, but this will fluctuate between 2 and 3%. We'll just look at this, right? So I'm DLMing this coin. You can see I have $20,000 in it roughly, and I set this coin up. I think it was last night, and so I've already earned like $200, right? And so we'll use this one for example though. So like FartCoin, let's say like this one's been around a little while, which is why I like DLMing it because it's not just gonna like rug out of nowhere. It could dip. Something could happen, and it could go down, which is the risk of DLMing meme coins. So you always want to be careful. I don't ever recommend like DLMing a meme coin and like not looking at it for days. Like that's a bad idea because in the market we're in, that's bad, right? There may be some coins that are like more stable, like a bonk or like this or like a goat coin or whatever that you could look at maybe like once a day. I recommend staying on the market as best as you can, but obviously people have jobs and things like that. So there's some other solutions I could talk about as well for that. But yeah, so for
Can I
this
ask
one,
you,
yeah.
can I ask you regarding this? Maybe I was thinking about this kind of strategy. So when I'm awake, I put like a relatively tight range, and then when I go to
Yeah.
sleep, I widen the range by like 4x. Is this a
Yeah.
legitimate strategy, or how do you
Yeah,
think
for
that
sure.
works?
I think that's a good idea. Yeah. So like when you're watching it, it can be tighter because that way, if it moves drastically, you have time to close it out and make a decision. Whereas when you go to sleep, you can do that as well. Yeah. So coins like this, I'll sleep on if I think the market's doing decent. I don't usually do that over the weekend. I'll do that on weekdays. Now, Sunday nights, I'll do that because we're going into the weekday. For me in the US, when the European and Asian markets, they wake up obviously before we do for a Monday in the morning with crypto. And so normally I'll wake up to the coin having already pumped and is already in like a downtrend. So I've actually started waking up earlier to try to catch those. Sometimes if I'm like really unsure and I have a lot of money in something, I'll literally set an alarm and wake up at like 4 a.m. to my time just to catch the pump. And you'll start to see that with markets and kind of what they do. But yeah, so this is a meme coin. You can see you can earn more on it. Sometimes you'll earn like even more than this, like 4, 5, 10, 20%, right? Which is pretty crazy. Yeah.
Sorry. Do you remember when Solana was going from 200 to 130? I remember I was in a pool that was earning 35% on Sol USDC daily.
Yeah. Yeah, and it's because the dynamic fee was pumping up a lot. And so because of that, and people were like buying it and were willing to pay more on the higher fee and stuff. And so yeah, I've seen like temporarily Sol USDC pools earning, 5, 10, 20, 30%, but usually it only lasts for like a few hours or maybe something like that. But yeah, so this is an example. You would set it up the same way. You could kind of decide on what strategy you want to use. You could buy some of the coin, things like that, and set it up. And so just as an example, but yeah, I have a fairly wide range on this. It's 100 bin step, 0.8. One thing to remember on the bin steps is like, again, this isn't an exact range. This is just telling you like how much percent something's going to move before it moves out of your bin. And so this will move like roughly 1% before it moves out of your bin. And so 100 bin step though pool, if you just do like the auto fill and you create it, it's going to move wider than it would if you were looking at a coin like Bob, which is like a 4 million market cap coin. 100 bin step on this can move like 50%, whereas 100 bin step on like this one would need to move only like maybe 15% to fill all of your range. So something to think about. Higher market caps, you can have lower bin steps compared to smaller coins. You'd want a smaller market cap coins. You want a higher bin step because the coins are going to move much more drastically percentage wise, right? So that's something to think about. But yeah, so you can provide liquidity just like this on FartCoin. I also have like a bunch of other coins. I have Cerebro, I have FWOG, stuff like that. And you can see these earning different percentages here. And yeah, did you have any questions about this meme coin specifically? I would just say like, obviously it's more volatile. It's something you want to watch. But obviously you can earn more. Similar strategy. On the impermanent loss, this coin's been around a while, but like if there's a coin that ends up dropping too low and it like just doesn't come back, which happens with a lot of meme coins, then that would be impermanent loss, right? You bought it at a certain amount, you set up the pool, you've been buying it on the way down, but now how much you own is worth less. If that ends up happening, like if this went all the way to the bottom of my range, I'd have no Solana. It would all have been exchanged into FartCoin. So right now my value's around just under 20K. But if it went all the way below, I'd end up having $0 in Solana and probably like 15K in FartCoin. So I'd lose like $5,000, right? So something like that could happen.
Maybe a good question would be, how do you decide when to exit the pool? When it approaches 25% to the edge, 30 more?
Yeah, so it's all dependent on your kind of risk tolerance and your strategy. But I would say it depends on the coin. It depends on, whether what you feel about it, right? Is it just in a minor dump or is it in something temporary because something happened? So like you can see here, if I go to it, I'm really close to the middle of my range. And that's because when I set this pool up, I actually set it up right here. And so I'm very close to the middle, or right here, somewhere right up in there. And so I'll draw these lines and I look at the range of the coin, right? And so basically what I did was on this coin was I looked at it bottoming out here, and then I waited for it to break back up above its previous highs, showing that it was now back into an uptrend, and I entered here. And so once I entered here, I set up a two-sided pool. So that way, even if it comes up and back down some, that's okay. I'm basically just looking for it to range. And so it came all the way up. It was doing really well. And now it's coming all the way back down. And so basically, I just draw these resistance and support lines. I don't do like crazy charts. You're not going to see me doing like the X and the Vs and all that. To me, I don't need all that. I just look at the support and the resistance. Resistance is on the way up. Support's on the way down. And so then I draw those lines. And so in this instance, I was just looking at it to break above here. I entered. And then now I'm looking for it on the way down. So for instance, I'll watch this. And so I entered here. So my get out would be the previous support down here. And so I would let this come down all the way to here, and I'm comfortably holding, and maybe it'll bounce back up. Maybe it'll bounce here. Maybe it'll bounce lower, right? It could bounce in a lot of different places on the way back up. But the way I would determine when to get out is I'm looking for the previous major support. And if it ever broke below this, meaning the candle closed out below this line, then I would sell and get out. Now, normally I set those up because obviously there's going to be previous supports down here as well. But like this is going to be too low for me. So you have to make that decision for you. But this is the point in which I would get out. Because if it drops below here, the next support isn't until down here. And then the next one isn't down here. And so if it breaks below this one, it's likely going to keep falling. If it breaks below this one, it's likely to keep falling. And so I just try to reduce like my losses as best as possible by having a good like take loss or take profit and stop loss. Yeah. And so
Makes sense.
that's kind of how I determine that. Yeah.
Cool. And do you always do two-sided, or sometimes you just sell the rips and buy the dips as well, or do you always do two-sided?
Yeah. No, I do. So you can enter into a coin by doing one-sided. So let's say you wanted to get into the FartCoin here and you think it's going to keep dipping, which it could bounce off of this. So this wouldn't necessarily be the best place to do this. But once you saw it bounce off of here, you can see it had a previous resistance here. And if you go back, it hit multiple times here. So this is a major resistance. So if it breaks out of this, it's likely going to keep going up, at least for some amount. As soon as it bounced off of this again and started coming back down, I would tell myself, okay, it's going to dip. It might dip a little bit or it might dip more, but either way, that would be where you could enter in a one-sided sold pool. And basically you would just come in and you would say, okay, I want to get into it. I'm just going to do, you take off autofill and you just do one like this, and you think it's going to dip, you just set it up. And then as it dips down, at some point, if it looks like it's going to start coming back up, you can close out of it and make a two-sided pool, or you could just leave this open, because once this gets down here, it now has basically become a two-sided pool, right? If it's ranging within here, you're earning off the buys and the sells, and so you could do that. But obviously, if you think it's going to come way back up, then you may want to set up one on the higher side. Also, you could just close out of it and then just like trade it essentially. You now just hold the coin, and as it goes up, it's now worth way more than what you bought it for. So there's a lot of different strategies, but you could do this. You could also exit the coin. So let's say I've set it up like this, and I'm like, all right, I'm ready to exit out of this coin, but I think it's going to go up. So I want to exit on the way up. I could close out of this pool, and then I could set up a one-sided FartCoin so that as it goes up, and I could do like a bid ask like this. And so basically as the token goes up, I'll sell it on the way up. And then once it moves out of this range, I'll sell more at the higher end, right? And so, sell more up here than I do down here, which is good because you want to sell it for more. And then once it moves out of here, I close it and I'll just have Solana left over. And I've earned fees. So whenever you're swapping, when you buy something, you pay fees. But if you set up a DCA in or out, which is a dollar cost average, basically you're buying or selling on the way down or on the way up, you're gaining fees instead of paying fees. And so, like if you go to Jupe here and you go to DCA, it actually costs, you can see down here, platform fee 0.1%. So you're paying fees to do the same thing you could be earning fees for just by doing this. It's the same thing, whether you dollar cost in or out. So you might as well just do it here. Now, eventually they will take fees on Meteora, but right now there is no fees. And even those fees may end up being less than that 0.1%. So you'll just have to measure that for yourself. So this is a more volatile meme coin. So somebody called this like around like the $2 or $3 million range in our fee printers Discord. We often will have coins like that pop up. And so what I did was I went ahead and got into the coin. I created a two-sided pool, and we'll look at it here. It is on the lower side of where I entered at. And so like I could have gotten out at certain points, but I actually drew these lines way back here. And so it's interesting to see them continuing to bounce off of the lines that I drew earlier. It's crazy how a coin will follow that. But you can see this coin, even after being in it for like maybe 20 or 30 minutes, it's earning 310%. And so obviously that's crazy. Yeah, so I have 9,600.
What's the volume on that? The fuck is that volume?
It's insane, yeah. So the 1 hour volume is 4 million. And so obviously like the value of this coin can go down. So I have 9,600 in it. It is slightly on the lower side. If you see here, I have a 200 bin 2% pool. which again, you need a wider, higher bend step on lower market meme coins. If it's a coin that you think is going to move crazy, you could even do like a 400 bin or a 250 bin, which it often will do. I am on the lower side here, but I've earned almost $1,000 in just fees, and I've had it open, I don't know, maybe 45 minutes. Right before we got on this call, I added it. Now, at any time, if it would have dropped below the range that I wanted, which was right here, this support, then I would get out. And I would be down a little bit, and that's okay. If I end up being down in this coin, yeah, I've earned a bunch of fees, which will offset how much I'm down. And so I'd probably roughly break even. If I ended up closing out of it, where is it? Right here, like down here, I'll probably be around break even. But if it keeps ranging for a little while before breaking down, I'll still be in a profit, actually, which is kind of crazy. Obviously, it's come down from its all-time high. If I wait for it and sell it back up here, then I've earned fees and I'll be in a slight bit of profit on the TVL as well. It'll come back to just above even. But you can see, like, I still have a good bit of range because I set a Y200 bin, that I can, like, a little more cushion before, you know, it would drop too low, if that makes sense. If I would have set up 100 bin, I would be like either just out or at the very bottom, and it wouldn't be that great. So on coins like this, I do set that up. So we'll watch this. If it does break down here, which actually this is the previous support right here. That was an old support I drew. So if it breaks below this, then I would just close the pool and sell, and I'd be okay with roughly the break even. But if I think that it's going to end up bouncing back off this, because you can see it broke below this support, which is just the most recent one. If it bounces anywhere here and comes back up, I'll keep watching. And once it comes either back to break even, or if I think it's going to go higher, I'll hold it and wait for it to come back up. Then I can close out. I'll have earned money off the total liquidity, and I would have earned a ridiculous amount of fees. Like, look, this was 500 and 490 just within the 1 or 2 minutes. It's already, I mean, you can just watch it tick up. So it's at 300%. So this is a meme coin. Obviously, at any moment, this meme coin should just go boom and dump all the way down, and I could lose thousands of dollars, right? So I've done a little bit of research on this one. Obviously, like, there's bad actors in the space, so just be careful of that. This is a low meme coin. I normally will only do like some of these here and there. I don't like to do a ton of these. This is like just a part of my strategy. And so normally I'll only do like max like 5%, 10% of my portfolio on a coin like this. Even that's probably a little bit high. And so that's just something to look at. I won't necessarily use like a ton of money. This is actually more than I normally use on it. Normally I'd be closer to like $5,000 on this. But I think I really liked this one after looking at it. And so that's why I did what I did. Also, you can look down here at the bottom. You can see the volume was crazy high on the pump. And the volume has still stayed pretty consistent, because if you look at the 5 minute, it's at 62K, which is still really, really good for 5 minutes. You can imagine like over an hour, that ends up being a lot. But the volume has died down. So usually on a new coin that pumps and then starts to move down, when the volume starts to die, usually that means that the price will start to dip as well. And that could be a good signal to get out. So that's something to look for. Obviously, I've been live streaming on here, and so I haven't been like as active watching it as I normally would, which is fine. But I think like at some point, if this bounced up here, like I may have sold here if I would have been like watching it super close. But at some point, if this breaks back up, I'll probably just sell close to my break even and just get out, because it's like, all right, I don't have a ton of confidence it'll keep going up. Or again, if it closes out of a candle, and usually I give these, like, these lines aren't perfect, so I'll give these lines like a little bit of leeway, right? So if it like, we like zoom in on this, if it closes out like right here.
Like, it has to be out of range for 2 or 3 minutes, because I see this is a 1 minute chart. So
I don't base it on like a time range necessarily. I just look at like the price of it. And so you could do it on a time range. But for me, I'm just looking at it to see like, okay, if it breaks just like a tiny bit below here, this line isn't perfect. Like, no range is like so perfect. You can literally draw an exact price and have it bounce exactly off of that.
Yeah.
But it's usually like fairly close. Yes. And because of this previous support here being so close, I'd probably let it drop to like here. And then if it doesn't, then let it come back up, right? Because many times it'll come down just a little bit below the line and then come back up. But anyway, but if it sits below that, one candle drops below, or if just a really big candle drops, that would obviously be a signal as well. But if it just drops a little bit, I'll wait. And then if it looks like it's building up another candle to drop lower, then I'll just go ahead and close it out and get out. And so that's what I look for. I'm hoping, obviously, that this bounces and comes back up. That's the hope. So we'll just have to see what it does. But that's the idea with meme coins, just to keep watching that. Yeah, we'll see. You never know.
Okay, so If we do a summary of everything we talked about, maybe you can tell me if I'm wrong, but I understand you find high volume pairs, you find the bins that make sense according to the market cap. Lower market cap, you need to go in the wider bin spread, so 100, 200, even 400, you said in some cases.
Yep.
And then you just have to look at the 1 minute chart and see how it's ranging. What I find super fascinating is that we can only use support and resistance lines. No any of these advanced technical analysis nonsense, like
Right.
just basic, straightforward support resistance lines, not to overcomplicate things. That's
Yep.
the summary of the meme coin trading, right? On Meteora. Kind
Yeah.
of.
And the way to draw these, just as a quick thing, is just the major ones, right? So like I wouldn't draw one like on like a lot of these little ones like this, right? Like to me that's not really like anything, right? You want to look at the major ones, which I think is pretty obvious, right? Like it's here, it's here, it's here, it's here. Like these big ones, this is where you would draw those lines at, right? Like this is the next one on the way up. I don't really count these little ones here. Like this is like fairly small. Like technically, yeah, it might be. But you want to look at the big ones like these here and here. This one, this is like kind of one, which is where we are now, which is why I drew that one. It's close to being too small. And then like this one here is a major one. This is one, right? So like you can see the little steps, they flatten out right at the tops and the bottoms. And you can see, look, like this one's starting to bounce. Now it may not bounce up. Sometimes it'll be a like what I call like a false bounce, right? Where it'll just come up a little bit, but then it'll come back down. And so it'll kind of trick you. A lot of people will see this and they think, oh, we hit the bottom, and then you want to buy here. When I'm entering, I don't ever buy off of a swing trade. So I don't buy off of just like saying, okay, it's bottomed. Because the likelihood of any person ever being able to predict when exactly the bottom is actually incredibly rare to do. There's times where it happens for me, but it's not something I can do consistently. It's nothing that anybody can do consistently, right? And so to think like, oh, I know exactly when it's going to do that, and then it comes back up. The reality is a lot of times people buy here, it'll come up, and then it'll end up dipping down further, and they end up losing money, right? If you want to do a tight swing trade like this, you can, but you're not going to make a whole lot off of that little bit, right? So
Yeah.
just something to think about. I like to wait. I call it down and uptrends, right? So this is in a current downtrend because you can see here it broke down from its all-time high, and the highs are lower than the previous ones, and the lows are previous than the lower ones. You can see here, right? I could draw a trend line here, but there's no need. I can just see it. And then you can see it actually started to go into a sideways trend where the high actually equaled the previous high. And then you can see here the low equaled the previous low. So this is what I call a sideways trend. And so it would become a downtrend again if it broke below this, because now we have a lower low than before. And there's a tiny downtrend here, right? You can see lower lows and lower highs, but overall it's in a sideways trend. And if this comes up again and bounces off this previous one, again, it's just going to keep ranging here, which for DLMMing is actually really good. You like to see a sideways trend. Eventually you want it to break back out and up, but sideways trends are good for earning fees because it stays within your range and generates a lot of volume that way. So we'll keep watching to see what this does, but that's just an example of something to watch as well. I look for an uptrend. So I would actually buy back in either down here when it breaks above one of these smaller highs, or you could even wait. And even though you're waiting, so like the profit may not be as good, this is clearly a key resistance. And if it breaks above that, it's likely to keep going back up. So you could get in here, and then as it comes up, you might be in the middle of its range for it to now range like this, or it'll just break out. So it's hard to know, but we'll keep watching this. I do like that it's bouncing back up here nicely. And once it comes back up close to my even point, which you'll see this line actually move up here, we're just earning more fees. It is slightly less than 300% now as the volume's dipped. But we're now, I've earned $1,100 in fees. And this number I entered right around 10K. So once it makes it back to even here, we'll be in a good bit of profit. So yeah.
Amazing. Yeah, this was a great demonstration of something a little more risky, but definitely potentially profitable if you can really take a look at the chart and make some logical resistance and support levels.
Yeah.
Amazing.
And one last point I'll make, because I do need to go, and I know we've been going for a little while now, is on these lower meme coins, you don't want to just like get any low meme coin. It needs to have high volume, because the high volume outweighs the risk, or it doesn't necessarily outweigh it, but it balances the risk, I should say. And so if you see a coin that's like 3 or 4 or 5 mil, but the volume on the 1 hour is only like 100K or a few 100K, that's not enough volume. You're going to be earning like 5 or 10% on the 24 hour, which may seem good, but the risk is so much higher. 5 or 10% on a 100 million market cap coin or up is fantastic. 5 or 10% on a coin like this is very low. You need it to say 100, 200, 300, or even upwards of like 800%, because that's the only way it's going to outweigh the risk of if this coin ends up going way down and you lose in that regard. So don't get into any just low cap meme coin. Only look into ones that don't have a high holder count on the top 10%. Make sure that the Twitter's active. You know, you want to check a few things out and you want to see, okay, like what is going on Twitter? Is it popular? Stuff like that. Like, so do a little bit of research when you see a low cap coin do well, and look at how much volume it has. Obviously, that's important. And then decide, okay, I think I want to get in based on that, right? And so you can look at, like, this has 140 likes, right? So you can see, like, this has a decent amount of interactions. If you go to the Twitter and there's like, it's got like 30 followers and no reactions, then it's probably not real, or you're going to end up getting dumped on, right? So just look into stuff like that.
Yeah, these are great tips. Always doing research on meme coins. I mean, sometimes we get rugged, but sometimes it just works beautifully, like in this case. So, but this was an incredibly informative and educational session. Thank you so much for taking the time to actually show us how the magic is done in real time.
Yeah, and just to promote myself real quick, in the Discord, if you want to learn more, you can join the Feed Printers Discord. We're happy to talk there. Yeah. Obviously, y'all have a good community with what y'all are doing, but if you're interested in that, we'd love to have y'all. And then also I stream on Twitter, so you can just go there. I'll actually be streaming in just a few minutes. I'll be setting it up. We'll be talking about similar stuff I'm doing here, but maybe a little more of the advanced stuff. We'll also be talking about Magic Eden Drop and some strategies around that as well. So that's it.
Yeah, I've been in Free Printers Discord for a couple of weeks now, and I've learned a lot as well. So if you're looking for a place to figure out Meteora DLMMs, Meteora Discord, obviously, and Free Printers are a nice place to be. Thank you so much for your time.
Thanks, man. Have a good one.
All right. Amazing. Have a good day.